Reverse mortgages often seem like a great solution, but many borrowers fall into unexpected traps. And not just because of the loan itself. You may have seen some seniors making shocking financial mistakes, but what if you could avoid them? In this video, we'll uncover some of the risks. Stay tuned all the way till the end when we'll have a special tip just for you. Hey guys, Lucas Smith here again, just hopping on to talk a little bit about reverse mortgages. We've got some great content for you. First off, high fees and high closing costs. Reverse mortgages often come with high origination fees, higher insurance premiums, high closing costs that are built into the loan. So read the fine print carefully because you want to make sure that you don't get caught up by these overexpensive loans. Reduced inheritance for heirs. Since your reverse mortgage is paying out based on the equity of your home, it reduces the home equity, the inheritance that you're leaving for your heirs. So if you have someone special and you want to leave them something, understand that you're cutting into it every month or every time you draw some out of that reverse mortgage. And in some cases, this could even mean that your heirs inherit little to nothing from your home. These loans also have an increased risk of foreclosure. What do I mean by that? Well, as soon as you pass away, nobody's servicing that loan. There's no payments getting made, there's no property taxes getting made, there's no insurance premiums getting made. Maybe they are, but you're the one on the loan and you're gone. So your heirs are maybe getting this mail, maybe not getting this mail, but as soon as you pass away, that reverse mortgage company can file for a foreclosure on that loan. So your heirs might have to fight a foreclosure in order to sell that property. Many of these reverse mortgage loans have variable or adjustable interest rates. So buyer beware. Be careful when you're shopping for those things. Know what you're getting. Make sure that you're not going to have one that the interest rate adjusts up as the interest rates adjust. These interest rates can increase over time and they can increase your overall loan balance. Receiving reverse mortgage payments can have an impact on your government benefits. So check that, right? A lot of government benefit programs have a limited amount of money that you can receive. And if you're receiving more than that by cashing out the equity on your home, that's what a reverse mortgage is doing, it could disqualify you for some of your much needed government benefits, such as Medicaid and supplemental insurance programs. So be sure to check this before you sign on the dotted lines. Some of these loans are complex. Heck, wait, hold on, stop. All home loans are complex. And I know for some of us, just reading that legalese and that verbiage around the loans is hard. Look, it's especially harder for those seniors in our communities. So make sure that if you're considering a reverse mortgage, that you have somebody else go over the loan with you. You want to make sure that you, the borrower, fully understand the loan's implications before you sign on the dotted line and commit your home, commit your equity, and start getting payments. Know what you're getting into. So, what this means is if you're on the loan and your spouse is not, your spouse could lose out on inheriting the home when you pass away. That's right. It means that they could physically take the house from your spouse or foreclose on the house from your spouse if you pass away. So be careful. Know what you're getting into. Home value changes. That's right. You guys, the market is always changing. We all remember back in 2008, 2009 when everything crashed. Some markets lost 50 to 70% of home equity values. If you're in a reverse mortgage based on your current equity and something happens drastic to your home value, that could actually put you upside down and you could owe more than the home is worth. I saw it happen to people. It's really tough. This definitely reduces your options for refinancing to get out of that. For selling the home, right, you're basically stuck owing more than the home is worth. Limitations on your ability to sell and relocate. Look, I've sold bunches of homes, half a dozen or more, with a reverse mortgage on them. While it's possible to do so, it's a little bit tougher. If you decide to move or move into a long-term care, might happen to some of us, you're going to have to look at what's going to happen with the home and how much you're going to have to pay off on that note when you sell the home. Here's one of the big dangers that nobody really talks about: misuse of funds. Look, I've seen people pull these reverse mortgages out in large bulk payments and spend the money, give it to family, give it to friends. You guys basically waste it, right? Not use it on something that benefits them or something that they really, really need. And you guys, look, if you do that, that note's going to come due. You've already spent your money ahead of time, right? I've sat down with more than one person who borrowed a bunch of money against their home and then they were upside down or dead even and they basically had nothing left. So know what you're getting into and make sure if you're going to take a bulk payment that you're spending it on something that's going to benefit you or going to have a long-term benefit. Another thing you want to know about reverse mortgages, and this one's critically important, you guys. Look, when you take that reverse mortgage, they're going to leverage your home for the entire amount of equity in your home. So your mortgage statement, if your house is worth $600,000 and you owe nothing on it, your loan statement is going to say you owe $600,000. Why do they do that? Well, they do it for a couple of reasons. A, they want to be in first position. They want to be the first person to get paid if you sell the house. Now, that doesn't mean you have to pay them the entirety of the $600,000, but that's what they're writing the note for. B, the second thing that it does for them, the lender, not you, the borrower, them, the lender, is it prevents you from getting multiple loans against the property, so it ensures that they're going to get paid in full no matter how much you borrow. So be careful, right? I've sold a lot of these properties, like I said earlier, and one of the biggest things that freaks people out is when they show me their mortgage statement and it's for literally hundreds of thousands of dollars. And even if they just started taking payments and they've taken maybe $20,000 or $30,000 in payments, that loan statement will still say it's for hundreds of thousands of dollars. So know what you're getting into. Know that they're going to leverage the entirety of the equity and then pay you out in incremental sums. Hey, thanks for sticking around. Here's our special hot tip. A loan, just like any other purchase, should be shopped around. You guys, this is a huge purchase. Look, I had some guys do some concrete work at my house. I got 3 bids. And you would be amazed at the number of people who go with the first person who makes them an offer. Don't do that. If you're seriously thinking about taking out a reverse mortgage or any sort of mortgage on your home, get no less than three estimates on the loan. See who offers the best terms, the best interest rates, and what's going to benefit you the most, period. Again, I'm a real estate broker, not a lender. This is just my advice, is get multiple opinions, get multiple options, and pick the best one for you, not just the first one. And I know, look, you guys, I've focused on a lot of negatives in this video about reverse mortgages. I get it. Here's my other part of the tip. It's a tool. It's like anything else, right? I know people who've used them for their elderly parents who needed more care and they needed to get cash out of their home to do that, and they did it and it worked great, right? So this is a tool like anything else. And like any other tool, it can benefit you or it can hurt you depending on how it's used. So you make the decision, make sure that you're making the best decision for you, weigh your options carefully, and make sure you're using this tool in a fashion that's going to be beneficial for you. Hey, you guys, if you like this video, like, share, and subscribe below. If you have any comments, right? I know I'm going to get comments on this from every reverse mortgage lender originator out there, right? Go ahead, write your comments below. I'd love to see them. I'd love to talk to you about them. Again, this is just some of the cons because I want people to be aware of what they're getting into. And make sure to watch the next video.